All right, hey yo, here we go. Oh, wait a minute, I don't talk like that. This is Dave at precisealgorithmtrading.com. It is Thursday, May 11th, 2023, and let's talk about the markets today. Again, we're very sideways. So, we did have the buy signal set in on the E-mini futures today. I've been talking about for a bit, and that it looks like it's actually trying to go up tomorrow already. So the futures trade overnight. So they're showing tomorrow's candle starting already, and that starts, I think, at 6:30 Eastern Standard Time. And so whatever happens during the markets like today, we can get a little bit of a heads up for tomorrow, even though it could reverse and it could mean nothing. So I also like to look at the regular S&P, which was down 0.17% today. However, we had the buy signal yesterday, and I already told you I bought in some yesterday for that very reason. Um, for what it's worth today, I'm just throwing it out there. SPXL also had a signal. It's kind of like a follow through to yesterday, so I bought some of it today as well. Does that mean I'm in way too much in the S&P 500 type um, uh, you know, exchange traded funds? Maybe, but they all have signals, and they'll have them around the same time, and I'm just going to kill them if they go. That's kind of what trading is. You got to like take the buy signal, and if you're right, great, and if you're wrong, then you kill it, and you do that when you get the signal the other direction, and that is it. I don't want to make this any more complicated than it is. I shared this tonight with some friends, and guys, if you're like paying attention to this tonight, you'll know who you are. But these are the moving averages I'm talking about, and they could be a number of things. I'm over here on the right hand side of the chart. Um, so when these things cross over, that's not the signal I use. I happen to have something built in that's better than that. It just happens to be, you can see two crossovers that it happens right there. You can see the one that crossed over to the downside over here. When the moving averages cross to the downside, it's too late for me to call it a signal. It does work, and if we go back on the chart, it happens all the time. There's some to the downside. This is what I'm talking about. If you actually look at this in context of these moving averages all by themselves when they cross, that's tradable. I mean, it's painful to try to trade like that, in my opinion. This is just the S&P 500. You can put Apple on here. In fact, I'll do it. And you can see here lately, all the way back from what's that signal on 2-2. So February 2nd, it actually had a crossover. What happens after a crossover? Well, it moved up in a muted move and then pulled back hard. So you have to be able to weather this pullback if you're going to play off of like literally off of a crossover, like just of moving averages. I've got it built so this thing's a little bit different, and that's why these candles turn green when they do. These candles turn green. When they turn red, you don't freak out. You got to figure out what to do at that point. Um, and I've got strategies for that. That's just stuff I do. But like you can see, this candle turned red, and the very next day, it didn't even come down to the low of that candle. It jumped from there and continued higher. So what if you just set a stop below that candle? That's one way of doing it. You could set a stop below the candle back here. That's just one pivot back. I call that a pivot because it's the low, the last low, as far as like when you're looking at lower lows and lower highs. How about this red candle right here? You don't freak out. You could just get out, but you could just set a stop underneath that, and the next day it took off. So that there's no guarantee to that. This just happens to be Apple an example. We could look up ExxonMobil, totally different market, and it had like a crossover right there. So you could use the crossover as a signal. I'm not going to do that because as soon as you get a signal like that, you get a pull back up into it that takes you underwater. How about you wait for the signal and then take the pullback? That's one way of trading. So, anyways, there's a lot to trading. I'm just giving you some ideas. So, anyways, let's go back to the major moving averages, the major indexes, and look at the Russell. We looked at the S&P. My technology has to hurry up and catch up. Come on. It's going to give me a error message. There it is. So we actually have a buy signal happening for tomorrow on the Russell 2000. So that's interesting if it holds. The Dow is still, it's pretty bearish looking. It's still in a downtrend. It's still red. I think the Dow is going to be one that drags us down if we stay down. I mean, literally right now we have a pull between the S&P 500 and the Dow. And then we have the NASDAQ that's been pushing higher. And I just showed you Apple. You know, Apple's a big player in the NASDAQ stocks, and it just keeps going higher. We got target dots up to the upside on the right hand side over here. It's a daily chart. We got target dots from a long time ago that looks like we're getting close to hitting. That's from November of last year. So, well, we'll see. That's literally what we're doing. We trade in these different instruments. I'm looking at these as an overall barometer of the markets. Oh yeah, check this out. That yellow line that I drew back on March 10th, we're getting ready to like get to the top of it. Now, you know, we're whatever 13,740 versus 14, so we're 260 points away from it on the NASDAQ, but you can see it's getting up there. I mean, it's pretty neat when it plays out like you think it's supposed to based on these targets that we talk about. And then looks like oil, I don't know what it did. Oil went down today by 1.77%. That's the USO contract. And we've been talking about that coming up against this moving average and then rolling off of it, and that's exactly what it did. Kind of wish I would have traded it that way, except I don't trade that short term personally. But then the actual oil contract right now, yeah, it's barely up for the overnight, but so you know it's bearish on the daily, bearish on the weekly, and we will keep going. That's what the external market's doing. Let's look at the internal markets by opening up stockcharts.com. We type in the bullish. You can probably type in bull, but you'll get more information. And these are the bullish percent indexes, and really they're a measure. We can use that as a measure of optimism in a market, buying versus selling. So what they're doing is measuring the amount of stocks. So this is the NYA, which I think has 7, 8, some thousand stocks, something like that, 7 or 8,000 stocks, and it's measuring right now 44.07% of them are on a buy signal. That means the rest of them, whatever that is, 56% and change, are on a sell signal. So more of them are on a sell signal than a buy signal. And what's that mean for you? Well, it kind of gives you a gauge, and it's also on a column of O's, which is bearish in the short term, and it went down by 0.25% today. But if you stack that up against the other things, so let's look at the transports. It's on a column of X's. 40% of them are on a buy signal. So the majority of them are a sell signal. The way the markets work, literally, like when there's an imbalance and you get too many things going on a sell signal, then it's going to reverse back to a buy signal. You get too many things on a buy signal and they reverse back to a sell signal. And, you know, as tough as that is, because the markets literally want to follow the least amount of players and take the imbalance and go the direction of the imbalance. That's what we're looking for. It's so counterintuitive, but that's what it does. So let's look at here's the SPX, which is really like what people look at as the market, and 49.8% of stocks are on a sell signal. I'm sorry, on a buy signal in the S&P 500. So most stocks are on a sell signal right now, but it's really close to 50-50. And we're in a column of O's, and so there's kind of a bearish tone right now, and that's been really the back and forth for a few days has been more bearish feeling, and we're just having to wait through it. But we got an awful lot of bullishness to see, like potential in the charts. So the Nasdaq has been in a column of O's for, it feels like, yeah, it's May, and it's been there since March. So for months we've been in a column of O's. We're waiting for this thing to reverse to a column of X's. That, in my opinion, is going to be like maybe the signal that shows that the rest of the market's going to go with it. And it's up by 0.56% today, which is next to nothing. But then the OEX and the NDX. The OEX is the SPX, the S&P 500 or 100. It's the top 100 stocks in the S&P 500. Down by 3.7% today, which looks pretty bearish. And then the NDX is in a column of X's and didn't move. So there is just a lot of chop right now going on in the markets. It's been a while since I used the word chop talking about these things. And then our automatic trading system. So when you're going through any market, but a chop market's a great time to be in an automatic trading system, because it's also, we're dealing with like intraday trading. And if the regular market's chopping, that means it's moving back and forth, but basically staying in a range. Well, you can see that our equity in this case right here is the Dow futures. It's not really, I mean, in the last couple days it's gone up nicely, but here in the last day or so here, really it's gone back and forth, and that's all it's done. Not a big winner, not a big loser. This is what it looks like on a 6-month basis. This is our equity, the results of our trading system. So after, every trade, when something wins and something loses, that's what it does. I'll show you that on this next thing. A trade happens, you either win or lose. Then the next trade happens, you either win or lose. And this is the net result of like all that happening. So there's a bunch of trades going on in this zone right here, and it went up some, it went down some, it went up some, it went down some, and at the end of the time of that trading, it's up more than it's down. That's it. So this is an example here on the Russell 2000, where that new equity peak, our equity went to a new high. I don't even know what day it was. In fact, we'll look at it. It didn't trade today. There's no new trades. This is the same chart that I showed yesterday. And this is what these trades look like. And in fact, that last trade happened on 5/9. Today's 5/11. So that happened on Tuesday. There were no trades in this system for Wednesday, and there are no trades for Thursday. So it's pretty cool, because there's, the signals just didn't happen. And I want to show especially new people looking at this. So all this red looks terrible, right? Now there's a nice trade right in the middle of all that, up $2,900. This is all algorithmic. So If something happens, then you get in, and if something else happens, then you get out. And then we have a series of more winners than losers. And in the middle of all the losers, we had a $7,000 trade. So that, now this is based on the contract size that of my accounts, our accounts at Precise Algorithm Trading. You can absolutely have less or more in your accounts. I think the minimum that I can figure out how to build a trading system for is like $14,000, and we could go through that. There is no maximum, but if you go through like some of the stuff about the basic setup of how these things work, and it's on our webpage, we talk about what your maximum drawdown has to be, and that your account size has to be able to weather three to four times your maximum drawdown. Traders go broke is really what they run out of money, because if you have a drawdown, you can't continue to fund, then you can't really get the pullback to the other side when it starts going back up again. So that's it. Traders run out of money. It happens to be that same way in a lot of businesses. Businesses, don't necessarily fail. They run out of money, and they can't keep going with cash until the market picks back up again. So this is what that looks like. The Russell 2000. This is our algorithm for it, and that trade sat there for 2 days. This is the NASDAQ, and it was going really well. Now it's in a sideways area. We've had trades up and down. These times are frustrating, but that's been going on for a few days now. And this is what it looks like on a 6-month basis. So hope that all helps everybody. That went a little longer than I expected tonight, but hopefully everybody's having a good time, even if we're mostly sitting on our hands waiting for these trades to take place. The market's going to move one of these days pretty quick, and when it does, it's going to move in a big way, either up or down, and I just want to be braced for either direction. All right, take care, guys. Good trading, and have a great evening.